82% is strong plus bars. And let me tell you what 92% is. 92% is strong plus bars off the 200. 92% follow through rate. It's all mapped out on the piece of paper. And so when you do these things, I got 4 things I act on, and the piece of paper, once I act on them, my job's done. The piece of paper takes over the rest. Boom, now you're trading like a professional. When you have this back and forth, salt and pepper, no color wants to give you the edge. What's the most recent failure to follow through? Let's go over what I'm talking about. When you see any one of these 4 things, boom, you make no questions, you just hit the buy button. 1, 2. This is my 2-level rebound concept. We'll come back to the top third and bounce. You'll find fat red bars, moves back up, we'll come to the top bottom. We make money playing the 8 to 9 times out of every 10 that it does a thing. When you rally 1 bar, powerful bar, or even a multiple bar run up, I want you to always split the run up or the run down in reverse. I want you to do 3 lines mentally in your mind. The top third line, the bottom third line, and then I want you to do the 50% line. So you've got the 1/3, you got the 1/3 here, and you got the 1/2 here. Now what this does is it sets up. So it sets up so the categories outside of the move are below and above. But let's talk about the categories within the move. So when you pull back from this rally to the upside, when you pull back in the third, the odds of going to here very high. When you go to this level, it's still good. Not as high, but it's good. Now, as you drop to this level, now the odds of a new high have gone very smaller. You anticipate 2-level bounce. 1, 2, see? And fail. If you get to here, you anticipate 2-level bounce. 1, 2, and fail. You understand? If you get to here, 1, 2. This is my 2-level rebound concept. Once you seriously break the halfway mark. Let's do it on the downside, and then you tell me if you get this. All right? So here's a drop. Boom! And from this drop, you're going to 1/3, 2/3, halfway. This starts to bounce. Where is this likely going? New low. We get up into this range. Where is this likely going? New low. Maybe not as deep, but new low. But if we get past here, odds are you're not going to make a new low. So now 1, 2. You see? If you get up here, 1, 2. Most people get into trouble by asking their stock to do, which is highly improbable. Oliver, can you lay out the features of an ideal trading plan? You have to be aware of all the parts of a trade to build a proper trading plan. There are 7 components of a trade. I'm not going to explain them here, but there are 7 components. I'll give you a few. Like one component is your entry method. Like how do you enter? You can't just have one entry method. So you might have 2 or 3 entry methods. You have an initial protective stop component. Like where do you draw the line? Where is this trade wrong? At what price is that? Where is that? Where is your uncle line? Where's the line in the sand? And what's the method by which you come up with that line in the sand? Do you have a name for it? When you grab all the components of a trade, identifying the trade, the entry, the initial stop, when and where do you add? What's your add technique? What's your add strategy? These things should not be done from the hip. They shouldn't be done based on feeling or a thought. They should be mapped out on a piece of paper. Your trade should already be mapped out before you take the trade, which means that once you're in it, basically the piece of paper does the rest. The piece of paper determines, based on your plan, where the protective stop is. The piece of paper determines
when and where you add and by how much. The piece of paper determines when and where and by what method do you take profits, and how much. Do you take half? Do you take a quarter? Do you take all of it? All of that has to be mapped out. How do you adjust the initial stop? So as your trade starts working, you can't keep the initial stop in the same place. You've got to move that. By what method do you move that? Where do you move it? When do you have the right to move it? Is it possible to move that too quickly or to move it too slowly? All of this has to be mapped out in a trading plan so that it's almost like following a script. Okay, I enter based on this here. I place my protective stop here based on this. I add one additional lot to my position based on this. I take half of my profits based on this profit rule, and I adjust my stop based on this metric. When you start trading specifically like that, where all of your trades start to be mapped out the same, meaning the same formula is applied to every trade, and that's where your consistency starts to come in. You can't be consistent doing your trades inconsistently. Every trade should be forced through the same formula. Every trade should be forced through the same template. Every trade should be squeezed through the same trading plan so that on the other side of the plan, out pops the trade that's the same as the prior trade. This trade was the same as the prior trade, and this trade was the same as the prior trade. And that's where your consistency comes from. Whitewashing every trade to look the same at the end of the trade. And so you need a plan to run your trades through. And your plan becomes the replacement for your thoughts, your feelings, and your beliefs. You see, your thoughts, your feelings, and beliefs, they are your enemies. They fail you. You think this way one time, you think another way another time. You feel this way now, but you feel a different way 2 seconds later, right? They're wishy-washy. They're flip-floppers. Thoughts and feelings flip-flop. You can't ever gain consistency trading based on what you think and trading based on what you feel. You've got to give the control of the trade away to your plan. It's not very often in life where something that has so much potential and opportunity is also easy. Usually, what has high opportunity has a high level of difficulty attached to it. But trading the open is actually not one of them. Most mornings are easy, but this morning was not. These are the things that we should delve into. So let's take a look at a few, and you'll understand why I'm saying that this morning was not all that easy. So if we go back to, for instance, Meta, this is your morning. It's sort of like a lot of sound and fury. It's signifying absolutely nothing. You got green bar up, red bar down, green bar up, little red bar, little green bar. It's not making up its mind. But there's a clue here that I want to bring your attention to. There's a clue here, right? Listen to me carefully, traders. This is going to reward you for the rest of your trading life if you get this lesson. There's a clue here when you have a morning like this, when I say failure to follow through. Here's the start of power. Check this out. Boom. And then you get this. That is a failure to follow through on the strength. No follow through. All right, let's look at the opposite one. And you have, right? Boom. Strong red and no follow through. So this is very important. Let me explain to you why. Because strong bars have a high follow through rates, depending upon the size. So a strong bar has something like a 70% follow through. Now, it gets more of a follow through the bigger it is. And if you really get it nice and powerful, it's something like an 82% follow through rate.
Okay. So, but all strong bars start off at 70. That's extraordinarily high. What does that mean? What does 70% mean? It means that out of every 10 trades, out of every 10 times you try to bet with the strong bar. If it's red, you bet down. If it's green, you bet up. You're going to have 7 rights out of every 10. How does you get an average 7? Sometimes it's less, sometimes it's more. But the average number of times you're going to see the same color again, follow through, red bar, more red bars, right? 70% of the time, 7 times out of every 10. That's very high. And that's enough to become rich. Do you understand? You don't need 100% to become rich at this. I like that number 70%. You need 70% or better, and you can get rich. Now, 70% is strong bars. 82% is strong plus bars. And let me tell you what 92% is. 92% is strong plus bars off the 200. 92% follow through rate. How do you get 9.2 times out of every 10? It means that a lot of times you're going to get 10 in a row, 10 in a row, 10 in a row, and maybe another time you'll get 7. But a lot of times you'll get 10 out of 10, 10 out of 10, 10 out of 10, 7, 8, 10 out of 10, 10 out of 10, 10 out of 10. That's how you get 9.2 times out of every 10. It's important to know these levels. It's also important to know that all you need is a 70% item, which we have in strong bars. But here's the rub. Because the odds of strong bars of all the different sizes or scenarios, because they're so powerful, because they're so reliable, when they fail, OMG, get ready for the opposite direction. The direction should be to follow through. You see, the direction should be to follow through. That's what the odds suggest. But just like in nature, when something is supposed to happen and doesn't, you better run for cover. I'm going to repeat that again. If something is truly supposed to happen more often than not and doesn't, take cover. The opposite scenario is about to knock you out. This is what I call the no follow-through event. Write that down. This is called the no follow-through event. Strong bar, no follow-through. Now, you might get back-to-back conflicting no follow-throughs. Look at Meta. We got the back-to-back no follow-through. So we got the no follow-through here. Strong green bar, no follow-through. Boom. Then we got the red bar, no follow-through. But you give the benefit of the doubt to the most recent one. The most recent no follow-through is the red one. And now, if you take this out, it's off to the races. Oh, right there. Do you see it? Now, remember this green bar. How beautiful is that? So that was your sign. Oh, wait a minute. Red, this solid red has a high follow-through rate, but the market is telling me that that's a fake, that that's a fugazi.
I want your trades to be mapped out before you take a trade. You're just following the same script as the last trade. So you know exactly when you're going to add. You know exactly when you're going to raise the stop. You know exactly when you're going to take half of the profits off. You know exactly where you're going to stop out. You understand? You know this is mapped out ahead of time. You need a small handful of playable scenarios. You have 4 well-defined buy. All right? You need that. You need at least 4. Okay? 4 solid things that are no question buys. If I ask a trader, what are the 4 things that you buy? Most traders can't answer me because they're buying their thoughts or their feelings at the time.
This trader got out of Apple too soon. So I'll show you. This trader got into this bar and put his stop here, which is a grave error. The appropriate stop is here. And if you can't get under that bar, you have to go up to wherever your maximum loss is. And you have to make sure that your maximum loss, wherever that amount is, if it's not there or below, you move it up, find your maximum loss. And when you find it, you have to determine whether or not it's in the bottom third of the bar. If it's not in the bottom third of the bar, this trade is not yours. Your stop has to either be under the bar or in the bottom third of the bar. You got it? So by making the stop here, the dude is asking to be taken out. Now, the major problem is that this not being part of our program, he didn't really quite yet understand that when you have power bars, the top third of the bar is the strongest support. The up to a half is the second strongest, but the top third is the most powerful. So you'll often find this, guys. Check this out. You'll often find fat green bars, drops will come back to the top third and bounce. You'll find fat red bars, moves back up, will come to the top bottom third and drop. Bottom third of power bar, and that top third of green bars, that's very powerful. This also counts for multiple bar moves. Sometimes you don't get just one bar, you get a series of bars in a run-up. This can be looked at as one giant move where the top third is the strongest area of support. This has nothing to do with the time of day. This is power. Power in the top and bottom third, whether it's green power has the biggest form of support at the top of it. Red power has the biggest form of resistance at the bottom of it. This power can be in the form of one bar. It can be in the form of a multiple bar run up or multiple bar run down. This is a multiple bar move, right? Now, you see how it's hanging out there in the top third, more or less? Okay, that's very bullish. This is the strongest area of support. And then up to a half, there's also this area of support right under the third. So under the third to a half, and then the top third.
The moment you hit the buy button, boom, now your clock tick, 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 tick. The moment you get out of that trade, the clock stops again. Now you can study all you want to until you got blurry eyes and a bad bladder. You can look at thousands of charts. That clock will not move until you get into the next trade. Your clock moves inside of trades. The second you're out of a trade, the clock stops. You're doing nothing but preparing for the next period that the clock starts moving, but you are not moving the clock by studying, by reading, by listening, by watching. No, only by trading. And so you need hours in trades. You need hours upon hours upon hours upon hours inside of trades. You are doing no good to your progress by staying outside of trades.